Good afternoon. Welcome to our webinar today. I've got quite a few different things that I want to go through, but let's just begin with the share which is on your screen right now, which is the company Montauk. This company specializes in recovering methane gas from rubbish dumps. That's what it does. It's a Philadelphia-based company. They've got a technology where they collect the methane from a rubbish dump and they use that to generate energy. And we put it on the winning shares list over here. It was, at that time, it was 23 Rand a share, 23.02 cents. And it's exactly a year ago. So we put it on the 7th of July last year. And today is the 6th of July, a year later, and it's now trading for 93 Rand 20 cents, as you can see there. So that's a gain of 300% over the year. I'm just mentioning it now because it's anniversary. It's the anniversary of when we put it on the winning shares list. And I urge you to follow that winning shares list and to look at the various companies that we put there. Another one I'd just like to draw your attention to, because it's quite educational, is a company called Orion Minerals. This company listed last year in September. You can see over here where it listed on the 20th of September 2017. And it's a company which mines zinc and copper in the Prieska area. So normally I wouldn't be interested in a company like this because first of all, it's a commodity share, and that makes it more risky, more volatile. But I did pay attention to the share because it was a new listing. So I follow all new listings on the JSE as a matter of course, because they often represent opportunities, as this one did. Now, I watch the share every day, and if you look in the top right-hand corner here, you'll see the volume traded on this particular day, 20th of September, the day it listed. There were 30,000 shares traded, changed hands there. You can see that. And if I move along to the right, so that was the first day's trade. The second day was the 21st. There were 15.2 thousand shares traded. And every day I was just watching this day, on this particular day, the 22nd of September, there was no shares traded. And then there was 137,000 and so on and so forth. So the number of shares traded was not huge. Many days there was no volume. And in fact, the average over this first period was about 20,000 shares per day. And then I was watching the share, as I do every day, and suddenly I saw this. Sorry, let me try and get it there for you. Okay, you can see now in the top right-hand corner there of the screen, 766,000 shares were traded. And all these trades up to this point on this share had been done at 24 cents. But that volume is much, much bigger than the volume that I'd seen in the share up till this point. And that made me start to pay attention. I now started to look into the share, find out more about what it was doing, and so forth. The next day, the very next day, it went up 1 cent. 75,000 shares were sorry, that's not the day I wanted. It's this day here. It went up 1 cent from 24 to 25 cents on that day, which was by now the 9th of October. But the important thing is another 723,000 shares changed hands. And then 2 days after that, it went up again to 26 cents, but this time 1.2 million shares changed hands. Well, that was enough for me. Clearly, somebody knew something. They were buying the share. And I decided, I didn't know, I couldn't find out what they knew and why they were excited about the share, but they were mopping up all the loosely held shares in the market. So anyone who didn't want their shares, these guys were ready to buy them, and they were prepared to pay a couple of cents more. Now, that is a classical insider trading move. So if you want to determine when insider trading is taking place, look at the share price. What you're looking for is small incremental increases in the share price, but accompanied by massive increases in the volume. So this share, which had traded an average of 20,000 shares a day for the first 10 days after it listed, suddenly was doing 1.2 million shares in a single day. That is insider trading. So they knew something. I didn't know what it was that they knew, but I climbed in anyway. And I put it on the winning shares list on this day at 26 cents. Okay, so now from there, the share, as you can see, went up dramatically. In fact, within a month, it was trading at, there was a day when it traded at 1 Rand 80. I sold out before that day. I got about 1 Rand 40, I think, for my shares intraday. And I made about 400% in less than a month. Now, the point about this little story is not to tell you that I'm wonderful or anything. It's just to show you that this information was actually available to every one of you. Every one of you could have found and looked at that information on that day. That's the point you need to understand. But even if you had looked at it, would you have realized the significance of that massive volume and the small increments in share price? Because that significance could have made you 400% on your capital in less than a month. So, and as you can see, shortly after that, the share fell back and it sort of reached a middle area. Now it's trading around 40 cents a share. But that isn't what interested me. What interested me was the speculative opportunity that was presented here. Okay. So I hope you've taken that idea in. Last week, we spoke about quite a lot of things, and I want to go back and just revisit those to make sure that you've got them in your heads. We talked about hammer formations on the JSE overall index, you may recall, and we did look at the S&P 500. I'd just like to go there again, because obviously we've had an interesting week in the S&P. And the S&P 500, as you can see here, it's in the middle of this correction, which I've talked about many times. We've encountered resistance at 27.86, fell back, and there's clear support at 25.81, but we've got a new channel which has emerged now. And that channel indicates that we will break up through this resistance here at 27.86 and go probably to break this high at 28.72. This is a very important thing because obviously our market will follow Wall Street up. That's why I pay so much attention to the S&P 500. And then underneath here, you can see this red line, which I'm highlighting here, is the long moving average, 300-day moving average. And throughout this correction, it has not turned down. It's just carried on going up. And that's an indication that this is, in fact, a correction, a 5-month correction, but a correction within a long-term bull trend. So if I just put more data on the screen, you can just see that bull trend. There it began over here in 2009. We've had the first correction in 2011, a second correction here in 2016, and now we're in the teeth of the third correction, which is what I've been analyzing for you here, the third correction. It's always important to keep your eye on what is going on Wall Street, because that gives you the context of what will happen on the Johannesburg Stock Exchange. Okay, so that's just a bit of an update. Then we looked at the currency. So because that's the other major factor that you always have to keep your eye on if you're a private investor in South Africa. What is happening to the Rand? So we'll just take a quick look at that. And you may recall that I have drawn your attention to the fact that the Rand is strengthening between two channel lines, this one at the top here and this one at the bottom, right? So two channel lines, and you can see that's where Nene was fired. This is the upper channel line, the lower channel line. This is where Pravin Gordhan was fired. This is the ANC's elective conference, this peak up here. And then obviously once Ramaphosa had been elected, the Rand strengthened substantially back to this 11 Rand 50 here. Since then, it has gone back, weakened again, all the way back to the upper trend line. So now I'm going to zoom out and just look at the detail here. You can see how it's been toying with this upper trend line. And there's considerable resistance there, and it has now fallen back to this lower level. So we're now at about 13 Rand 50, and if I go to the live Forex chart here, I'll be able to hopefully in a moment show you that it is currently at just under 1160. So it's dropped back off that trend line, and obviously there's considerable support for the rand at around 1370, 1375, 1380 in that vicinity. So we're in a situation now where it may be that the rand is going to fall back again towards this lower channel line over here, and you need to take that into account. So it's quite possible that from the place where we're at, we could see a strengthening trend now develop going back towards the lower channel line. That could be caused by a lot of money coming back into the country. So money that left the country in May, and remember in May month this year, we had 20 billion rand of sales on the JSE from foreign investors, a net 20 billion that went out of the country. Obviously that weakens the rand. And we had 30 billion of sales in the bond market. So a total of 50 billion rand went out of the country because of the international sentiment towards investment, which went from risk on to risk off. So investors overseas suddenly, because of Mr. Trump's trade war that he's busy with in China, suddenly decided they were going to pull their money out of emerging markets and put them in US Treasury bills. And that's what they do. And then when it comes back to the risk on cycle, they take their money out of Treasury bills and they go back to emerging markets like South Africa. And of course, they're looking for the high returns here. I mean, the US, the long bond in America, which is the US 10-year T-bill, Treasury bill, is paying just under 3% interest. If you compare that to our government bond, our lead government bond, which is the R168, that is paying just under 9% interest. So there's a 6% gap there, which shows the price that we have to pay here in South Africa for our additional political risk. That is mostly political risk. The difference between a first world country and a third world country, it shows up very clearly in the difference between the interest rates that you can get on the best government bond in each of those countries. Now, we also, last week, we discussed the question of technical analysis. So I'd like to continue with that discussion. So this is like a sort of educational part of my talk. And we talked about technical analysis being the search for patterns. And we discussed the question of whether the market, in fact, moves at random or not. And we came to the conclusion that it doesn't move at random. That there's a definite dependency between today's price and tomorrow's price. Now, you see, if you compare that with, for example, a roulette table, in roulette, there's no relationship between one spin and the next. So the croupier spins the wheel and it lands on number 4. You can't learn anything from that fact about where it's going to land on the next spin. It has no relationship. There is no dependency. But in the stock market, there is a dependency. There is a relationship between yesterday's closing price and today's closing price. So that's the difference. You see, the market is clearly not random. If the market was random, a share would be able to go from 100 Rand today to 1 Rand tomorrow and then 1,000 Rand a day after that. A random series can do that. But clearly, no share on the JSE is ever going to do something like that. And if it is not random, then the market must contain patterns. It merely remains for us to find and isolate to find the mathematical tools that will enable us to isolate those trends and patterns so that we can use them to help us to predict what might happen in the future. So that's the basis of randomness, is that there's no dependency between today's price and tomorrow's price. But if we've established that there is a dependency between today's price and tomorrow's price, then the market must contain patterns. The next logical question is, where do these patterns come from? What causes the patterns in the market? That's a very interesting question. Basically, those patterns are caused by human behavior. People in large groups behave in a predictable manner. They share certain behavioral characteristics which cause them to respond in very much the same way altogether. And that causes the market to move in broad sweeping trends. And those behavioral characteristics can be exploited by certain technical indicators. Let's take a simple example, the moving average. Now, we all know that the moving average works, right? Studies in the United States of America have shown that if you applied a 200-day moving average to the S&P 500 over the last 100 years, you'd have done, and you bought and sold on every moving average buy and sell signal over that 100-year period, you'd have done 10 times better than the guy that just bought it at the beginning of the 100 years and held it to the end. You'd have done 10 times better using a moving average. And here's a classic example, which I've put on the screen for you. Here you can see that the moving average buy signal was given somewhere over here when this company, EOH, was at R6.50. And the share stayed above that moving average all the way to there. There you've got a sell signal, and that sell signal was at roughly 154 Rand. You then got another buy signal over here at 140, a sell signal there at 143, and since then you would have been out of the market because the share price has not broken up through that moving average. But obviously at some point EOH will break up through this long moving average, and there will be another opportunity to buy. So what I'm saying is the moving average works, and the question I'm asking really is, why does it work? What is it that we are exploiting here? What human behavioral characteristic are we exploiting when we use the moving average? And the answer to that question is, we are exploiting the fact that people generally have difficulty in adjusting their perceptions of the value of an asset, like a share, quickly. I mean, think of yourself. The most traumatic experience you can go through is to write off a motor vehicle, because what was worth, 250,000 Rand 5 minutes ago is now a useless heap of scrap metal. If I told you your home was worth nothing, you would have an extremely difficult time accepting that, even if I was right. And in the share market, let's suppose you are holding a share which is trading for 20 Rand today in the market. Would you accept 1 Rand for it tomorrow? No, nor would anybody be stupid enough to offer you 1 Rand. But if it was overpriced at 20 Rand, it's quite conceivable that tomorrow you might accept 19 for it. And if you were still holding it the day after that, you might accept 18. And in fact, it might eventually reach 1 Rand, but it will never do so in 1 day. And that means that mathematically, it must cut down through the moving average, and you will always have time to sell. So you see, we're exploiting, with the moving average, we're exploiting a human behavioral characteristic, a generalized human behavioral characteristic, where people have difficulty in adjusting their perception of the value of an asset quickly. They can do it slowly, but they can't do it quickly. And that means that shares tend to move in broad sweeping trends, both on the downside and the upside. To the extent that they do, the moving average will work, and to the extent that they don't, it won't work. So obviously in a sideways market where the share is moving up and down within a narrow range, moving averages don't work. But as soon as you get the emergence of those broad sweeping trends, the moving average is going to work very well. Okay, so that's what I wanted to really say, is that it's all about human perceptions. And when you're looking at a technical indicator that you want to use to determine buy and sell signals, you need to ask yourself that question. What human behavioral characteristic am I seeking to exploit here? Because you see, technical analysis, or charting as it's sometimes called, is actually a social science, like economics or psychology. It's a social science. It's a study of human behavior. We are looking for patterns in human behavior as they are expressed in the share's price and volume pattern. So people have various characteristics. How can we exploit those characteristics? And I've just given you the example of the moving average as a background to that. So I hope that you've got a bit better understanding of the relationship between fundamental and technical analysis, which I dealt with a couple of sessions ago, and what technical analysis does really, which is the search for patterns, and where those patterns come from, because that was my main objective today, was to give you some insight into where those patterns might come from. Of course, the other beautiful thing about technical analysis, which you don't get from fundamental analysis, is that it gives you a clue to insider trading. And we've just seen that with that Orion Minerals share, where the insiders know something. And they're always insiders. In any situation in the stock market, there are always going to be insiders. There's a group, maybe 5 or 6 people, maybe a dozen people, who know important information before it is released to the market. And I can tell you, they're always going to trade. So insider trading is illegal, but it goes on all the time. The secret is to be able to identify it in the charts so that you can jump onto the bandwagon even before you know what is really going on. So, typically the share starts to move, and then a week or two later, there's a public announcement, maybe the share is suspended and the playing field is leveled. But by then it's too late. You need to get in with the insiders if you want to exploit that kind of situation, and charting, technical analysis, can help you to do that. Well, ladies and gentlemen, that's what I've got to tell you today. I hope that you enjoyed the webinar. I will be back on Friday next week, so mark the time in your diary, 1 o'clock on Friday next week, and we'll have another chat about the stock market. If you've got questions, you're welcome to email them through to me. You can also contact me and come and visit me if you live in the Gauteng area. I'm in Centurion on Monday, Wednesday, and Friday. I'm here at the head office in Centurion, and you can come and sit with me and go through your particular situation. I'll be happy to assist you. So, till next Friday, goodbye.